All right, let's dive right in. Today, we are talking all about smart investing for women. We're going to break it all down and demystify the entire process, from that very first step all the way to building real long-term wealth. Right off the bat, let's get one thing straight. The very traits that women often possess, patience, a focus on the long term, a more thoughtful approach to risk, these are the exact ingredients for successful investing. And that's not just a nice thought, it's actually backed by research. It means you are probably already hardwired to be a great investor. So that brings up a really important question, right? If women naturally have these successful investing traits, what's holding us back? Well, it's usually a mix of things: societal pressures, some unique financial hurdles, and honestly, sometimes it's just not knowing exactly where to begin. We are going to tackle all of that today. Okay, first things first, let's completely reframe how we think about this. For women, investing isn't just some nice to have financial goal. It's truly a superpower, one that lets you take control of your financial future and tackle a very unique set of challenges. Here's the reality of the situation. Women often face a very different financial journey. We're dealing with things like the wage gap, maybe taking time out of our careers for family, and hey, we tend to live longer. All of this means our money simply needs to work harder for us for longer. Investing is without a doubt the most powerful tool we have to bridge these gaps and build genuine financial security. And here's the beautiful part. The market rewards exactly what we've been talking about: patience and looking at the big picture. Real success in investing isn't about making risky, flashy trades. It's about slow and steady growth over time. Your natural strengths are perfectly aligned to win this game. Okay, so you're feeling empowered, you're ready to get started. That's awesome. But hold on, before you make that first investment, we need to build a solid foundation. Think of it as your financial safety net. Think of this as your pre-flight checklist. It's a really simple 3-step process to make sure you're investing from a place of strength, not stress. So first up, an emergency fund. Second, getting a handle on any of that expensive debt. And third, knowing why you're investing in the first place. What are your goals? Let's zero in on that emergency fund. Seriously, this is non-negotiable. We're talking about 3 to 6 months of your essential living expenses just sitting in a safe, easy-to-access account. Why is this so important? Well, if your car suddenly dies, you can use this cash instead of being forced to sell your investments when the market is down, which could mean taking a huge loss. This fund is basically your portfolio's bodyguard. All right, next up, debt. Look, if you have credit card debt or personal loans with interest rates higher than, say, 8%, paying those down is the best investment you can make. It's a guaranteed return, and that's something you just can't find in the stock market. Plus, it frees up so much of your cash flow for the future. Okay, with that solid foundation in place, now comes the exciting part. Let's actually make your first investment. I promise we're going to make this feel simple and totally achievable. Let's walk through how you actually get your money working for you in the market. So first, you need a place to do your investing, and that's called a brokerage account. You can open one online in like 15 minutes. It's super easy. You want to look for big, reputable companies like Fidelity, Schwab, or Vanguard. The key is to just pick one that feels easy to use and, this is important, has low or even zero commission fees on trades. So, you've opened the account. What on earth do you buy first? Well, you could try to pick individual stocks. Think of that like trying to pick the one-star player on a team who's going to score all the points. It's super high risk and takes a ton of research. Or you could buy something called an index fund or an ETF. These are like baskets that hold hundreds of different stocks, so it's like you're betting on the entire team to win. For beginners, it's simple, it's low cost, and it's by far the smartest choice. And listen, the most important thing here is to not get frozen by trying to find the perfect investment. That doesn't exist. The only goal for you right now is just to start. Just get your money in the game with a simple, diversified fund. You can always get fancier later on. Fantastic! You did it! You made your first investment. Now, let's zoom out a little bit and think about how to build a complete long-term portfolio. This is where a little bit of strategy comes in. This brings us to probably the single most important concept in all of investing: asset allocation. It sounds complicated, but it's not. It's just the recipe for your investments. You know, how much you put into stocks for growth versus how much you put into something safer like bonds for stability. This one decision will have a bigger impact on your long-term success than any individual stock you could ever pick. So what does a simple but powerful recipe look like? A really popular one is called the 3-fund portfolio. It's so easy. You just own a big chunk of the entire US stock market, a piece of all the international stock markets, and then a small slice of bonds to keep things stable. That's it. It's diversified, it's low cost, and it is incredibly effective. And remember, this plan isn't set in stone for the rest of your life. It can and should evolve. Maybe once a year or so, you'll just check in and rebalance, which is just a fancy word for selling a little bit of what did really well and buying a bit of what didn't, just to get back to your original recipe. The point isn't to have a perfect plan, it's just have a plan. We have covered the why and the how. Now for the final, and I think most important part, the mindset and the habits that are going to turn your investing into real, lasting wealth. I absolutely love this quote because it just perfectly captures the whole philosophy. You are not trying to get rich quick. You are patient and methodically building wealth over many, many years. Having this mindset will save you from making costly emotional mistakes. And the magic that fuels this marathon? It's compound interest. Just look at these numbers. If you invest $500 a month for 10 years, it could grow to around $87,000. But if you stick with it for 30 years, that same $500 a month can grow to over $600,000. That is your money making money for you, and it is the most powerful force in finance. Now, to protect that beautiful compounding magic, you have to avoid two major emotional traps. First, panic selling. When the market inevitably drops, and trust me, it will, the absolute worst thing you can do is sell. That just turns a paper loss into a real one. And second, avoid chasing trends. Buying whatever was the hot new thing last year is a proven recipe for buying high and selling low. And that brings us right back to our main message. Your true superpower isn't trying to be some genius stock picker. It's using your natural strengths of patience and long-term focus to just stay consistent. It's all about time in the market, not trying to time the market. So let's end with a question for you. We've gone from the why to the how. The entire plan is laid out. The only thing left to do is to take action. So forget about tomorrow or sometime next week. What is the one single first step you can take today to start on this journey? Is it calculating your emergency fund? Researching a brokerage? The power is literally in your hands, so go for it. Start now.